Good afternoon, everybody. My name is Sam, and standing beside me is Tom. Over the last few weeks, we, along with the BSB 107 analyst team, have executed a rigorous investigation into Premier Investments and Kathmandu Holdings, two of Australia's prolific retail stocks. We're here today to present you our findings, and for you lucky individuals listening, we're going to provide you with an ASX steal that you won't want to leave out of your portfolio.
As mentioned by Sam, we are joined by a promising group of junior analysts to complete this review. Myself, Tom Thorpe, an IT whiz and data analyst, were accompanied by Joseph Busser, a research and forecasting expert, to explore the future of Kathmandu Holdings and crunch the numbers around the value of the business. Similarly, Cooper and Sam emerged their various expertise on financial, innovation, and trend analysis to complete an in-depth review of Premier Investments, where they are going, and where they are headed.
The two companies have extensive histories, both founded in 1987 and consisting of key prominent retail brands. Premier Investments wholly owns the Just Group, consisting of brands such as Peter Alexander, Smiggle, Just Jeans, and many more, whilst it also has a 28% stake in the Breville Group. Overall, they possess a huge market cap of $3.92 billion. Kathmandu Holdings was founded in New Zealand and is a significantly smaller company with a market cap of $873.5 million. However, its recent acquisition of Rip Curl, ownership of Obos, and of course Kathmandu form a diverse portfolio for the company.
Premier Investments were established as an investment vehicle to maximize growth and capital returns to its shareholders, with a vision of assisting clients in all aspects of accumulating, preserving, enjoying, and distributing wealth to achieve financial peace of mind. Kathmandu aims to make great gear that opens up travel and adventure to everyone, while also investing in communities around the world through their community investment strategy. Their vision is to achieve this involves building a diverse portfolio of brands that allow them to meet global year-round needs in the outdoor, sports, and lifestyle categories.
It's crucial to look at the value drivers for both companies and whether they will facilitate future growth. Premier Investments' most significant driver of value comes in their innovative transition to e-commerce.
Over the last 9 years, Premier Investments have targeted their capital expenditure in developing a fully integrated online channel, a wholly owned distribution centre, and various other IT infrastructure. This investment has paid dividends for the company, with online sales totaling $220 million in 2020, up 49% from the year prior. Due to the rapid growth of internet penetration worldwide and continuous technology advancements, online revenue is expected to increase by 6.2% annually, and Premier Investments are anticipated to capitalize on this change.
Premier Investments' gradual change to a brick-and-click strategy demonstrates their impressive risk management, especially during COVID-19. With physical stores shut, the company's online presence ensured that sales kept coming in. Take last year's Mother's Day trading week, for example. All 122 of Australia's Peter Alexander stores were shut, and yet sales grew by 18% from the previous year.
Premier Investments is also strong in terms of leadership. The company has recently announced the appointment of Richard Murray, who was the past CEO of the extremely successful JB Hi-Fi Limited, with over 25 years of experience in retail and finance. Industry veteran Solomon Liu told investors that Mr. Murray was unquestionably one of the best retailers in Australia and will be a significant boost to Premier Investments as a whole.
As an outdoor adventure company, Kathmandu Holdings places a heavy emphasis on sustainability and recycled products that fits within their brand image that consumers expect and love. In the past 5 years, initiatives such as fully solar green stores, 100% sustainable materials, and 40 million litres of water saved with eco-friendly dyes have portrayed their eco-friendly approach. They have also actively invested in sustainable products such as fully recyclable and natural materials in their Obos shoes and planting a tree for every product sold.
These investments may not improve the company's finances on paper, but it creates a brand image that consumers, especially in today's environmentally conscious market, support, as it has associated the company with sustainability, diversity, and strong ethics. This will lead to a strong brand image and increased sales and consumer numbers.
The recent acquisition of Rip Curl has added a great degree of value to the company and has acted as the primary revenue driver over the COVID-19 period. In addition to this, Kathmandu were well prepared for the pandemic and preemptively raised $192 million in capital funds, which acted as a cushion for the unprecedented events of COVID.
Further, the addition of Rip Curl brand has led to new ownership of patent technology and exclusive products like E-Bomb E7 wetsuits. Kathmandu Holdings has expanded their wholesale doors to impressive numbers of 5,786, thanks to the acquisition of Rip Curl. Their Gore-Tex jackets are also class-leading with fully waterproof, insulating and breathable materials. Thanks to these developments, they can now accommodate for cooler weather conditions through Kathmandu and warmer climates through Rip Curl.
There are areas of uncertainty for each company, however. Premier Investments do suffer some pitfalls, most prominently their insufficient liquidity. Premier Investments doesn't have a strong ability to pay short-term debts, as seen by its current ratio of 1.25 to 1. This is well below the widely regarded clothing retail industry benchmark of 1.69 to 1. Furthermore, in all honesty, we cannot predict that Richard Murray can keep his hot streak going that he had with JB Hi-Fi, but we do like his chances.
Many aspects of Kathmandu's business are also in the red, with reduced profits, uncertain leadership, and rising debt. In recent times, Kathmandu has been at a loss for leadership with the absence of a CEO for the past 7 months. Only recently hastily promoting CEO Michael Daly, former CEO of Rip Curl, therefore fulfilling Kathmandu's lack of leadership while also leaving a vacancy in the Rip Curl brand.
This lack of leadership was no more obvious than stalling profits from Kathmandu during COVID and their inability to evolve into a predominantly online brand during the pandemic. In addition to the lack of demand for international travel, their value to consumers has been hindered. Despite their nearly $192 million in capital funds, their debt has climbed to $8.7 million.
When uncovering the intrinsic value, we have assumed the following for each company.
We assume that revenue in the apparel market continues to grow as the market is expected to increase by 5.19% in the next 5 to 10 years.
Assume significant reinvestment in online technology and infrastructure continues, along with the closure of inefficient revenue and geographical stores.
We're assuming online retailing revenue grows 6.2% annually.
We assume newly appointed CEO Richard Murray can translate his previous success for Premier Investments, which will double Premier Investments' market capitalization in the next 5 to 10 years.
And finally, we assume economic prosperity will return to pre-COVID levels and discretionary income will rise as a result.
Therefore, we estimate Premier Investments' future growth of free cash flows to be 15.39%.
For Kathmandu Holdings, we're assuming that travel will increase once the pandemic is over, driving sales back to pre-COVID levels, if not higher, due to the acquisition of Rip Curl.
2. Once travel overseas is allowed, it is expected that revenue will increase by 20%, therefore providing Kathmandu Holdings with a larger amount of capital to fund future business endeavours, as they are renowned innovators.
Third, the eco-friendly and sustainable view of the company will further increase growth in sales by 2%.
Fourth, Kathmandu Holdings will be able to recover to pre-COVID levels and eventually surpass this with the acquisition of Rip Curl, which its full potential was not seen due to the pandemic.
Therefore, we estimate Kathmandu Holdings has a predicted growth rate of 32%.
Incorporating the red flags previously mentioned and factorizing in the uncertainty around the growth rate assumptions is essential to discount future growth for both companies.
Historically, the apparel industry is strongly correlated to economic growth, and the uncertainty around the global economic recovery and how discretionary income will be affected increases uncertainty for the company. As such, we tend to assign a discount rate that is 10% more than the growth rate.
Further uncertainty is around whether the new CEO Richard Murray will be able to replicate his performances at JB Hi-Fi. As Premier Investment is a larger company, growing the market cap becomes increasingly difficult.
The strong value drivers of the company offset much of this uncertainty, and promising economic indicators show Australia is recovering well. As a result, we assign a discount rate of 22% for Premier Investments.
The same uncertainty applies for Kathmandu Holdings in relation to the recovery of the economy. However, sale growth for Kathmandu is also highly dependent on the recovery of the travel industry. Therefore, the uncertainty around whether travel returns to pre-COVID levels will discount the growth of the share.
Furthermore, the capabilities of the new CEO, Michael Daly, are unknown. Thus, we are assigning a high discount rate of 34%, as Kathmandu are way more vulnerable to these uncertainties. Incorporating the growth rate and the discount rate for the two companies, we can extract our measure of the fair price.
Our intrinsic value for Premier Investments is $22.71 per share. This is lower than the current share price of $25.21. However, Kathmandu is undervalued by our forecasts. The current share price is $1.42, but we estimate the economic worth per share to be $3.80.
At today's prices, Kathmandu is severely undervalued, with more than 100% growth predicted in the next 5 to 10 years at this current price. We also believe that as the company grows in the following years, they will increase their dividends to pre-COVID levels of 11 cents and possibly higher.
We can also see Kathmandu achieving their vision of becoming a year-round apparel brand, with many exciting innovations emerging within the company.
There you have it, people. Our expert team has worked tirelessly to find this significant investment opportunity, and we urge you to take advantage of it. Thank you.
Thank you.